Good morning. This is a live daily market outlook for Tuesday, 10th of July 2012, prepared by Windsor Brokers. Not much action seen in the markets in past 24 hours. However, the negative tone triggered by still gloomy outlook for the world economies keeps the currencies in the sideways movement, with commodities still being under increased pressure due to a stronger dollar, as it's been used in the past couple of days as a safe haven instrument after rather disappointing U.S. jobs data released last Friday, and still high uncertainty about European situation, where still no firm decisions and materializing basically the ideas of the EU summit last week, keeping the more pressure on the single currency, and still investors still keep under increased fear of possible further spreading of the crisis in the Eurozone. Some positive tone came from China, as China's trade surplus jumped on its release overnight. The strength on the domestic demand in the world's second biggest economy is increasing as the biggest economy, as the imports rise at only the half pace that is basically expected, and this is again signaling a need for Beijing to do more to bolster the growth. The Chinese officials singled out the debt crisis in the European Union, China's biggest trading partner, as key to Beijing's ability to meet its 10% target for trade growth this year, with softening sales in the Eurozone in the first half of 2012, seeing the United States overtake it as China's top export destination. More from today, from yesterday's comments of European Central Bank President Mario Draghi, who kept the door open for further interest rate cuts, saying any decision on further reaction would depend on the economic data. Draghi also urged the countries not to let up on efforts to balance their budget, even though savings measures can cause the social tensions, and said that governments should be involved in any bank resolution where taxpayers' money is involved. The reminder, the ECB cut its key policy rate to a record low at 0.75% last week in order to shore up the Eurozone economy, which is on the brink of recession, with even powerhouse Germany showing some signs of weakness, and this is actually one of the main threats for the Eurozone. Still no firm signals of any improvement in the current quite bleak situation. The UK's retail sales are boosted by Queen's Jubilee in June, and this is some of the positive releases. The retail sales basically rose at their fastest annual pace since December during June, as they were boosted by Jubilee holiday of the Queen and the warm start of the month, as the British Retail Consortium said today. The BRC said for retail sales or sales at stores open for at least a year rose by 1.4% in value terms compared with June 2011, following a 1.3% increase in May. From today's calendar that we are going to take look now, as said, the Chinese trade balance jumped to unexpectedly to 31.7, widened the trade surplus widened to 31.7 billion compared to 22.6 billion forecasted and 18.7 billion of the May's release. Japanese household confidence holds around the previous, actually slightly lower than the previous release at 40.7, coming at 40.4%, and lower than forecast at 40.9%. Still to come from UK, the manufacturing production for May is forecasted at 0.1% compared to minus 0.7% of the previous release. UK's trade balance is also expected to improve, as forecast for today shows the trading gap narrowing to £9 billion compared to £10.1 billion gap of the month of April, and industrial production from UK is expected at minus 0.1% compared to unchanged 0.0% of the previous week. Also today starts finance ministers of Eurozone meeting with America's starting with Canada's housing starts at 12:15 for June. A slight decrease from 211,000 starts in month of May is seen at 203,000 forecasted for today. From US at 1400 GMT, July's economic optimism that is expected to show some improvement according to today's forecast at 46.9 compared to 46.7 previous release of a month of May. And a quick look at the currencies and the recent movements and the outlook for today. As said, most of instruments stayed in rather quiet mode, just off their yesterday's levels. The euro is above the basically yesterday's fresh low at 122.55, fresh 2-year low after the pair broke below the previous one at 122.87, with a brief consolidative corrective action still being limited at the upside, and the brief break above initial barrier at 123.00 did not show much, as 123.20 basically limited the upside ahead of more significant 123.60 and 124.00 break point, and while the later holds the upside capped, not much to be expected of the corrective action. On contrary, as risk aversion remains fully in play, the downside risk sees potential for further extension below 122.55 with the 122.00 round figure support, and the more significant June 2011 low seen as our next downside target. As said, strong resistance at 124.00 that marks basically the break point, as we have the previous low of 28th of June, and also the close to the previous high of last Friday at 124.02, and close to it is 124.22, 38.2% retracement of the down move from 126.91 to 122.55, and basically only break above this level would provide relief and prevent the pair from further losses. Otherwise, likely scenario would be any rejection under 124 to be preceding a fresh leg lower, and as mentioned previously, loss of 122.55 to open 122.00 and 121.50. The studies on the 4-hour chart are in the negative territory, with some slight pointing higher, but so far not seeing much of this negative tone is still seen on the hourly chart, as a failure to clearly break 123.00 as descending 55 days moving average at 123, currently at 123.27, still keeps the upside limited, with the near-term price action hovering around 20 days moving average, which is currently standing at 123.00. Any action higher, as mentioned, needs to clear 124 as a strong barrier in order to open way for stronger recovery. Otherwise, likely scenario would be further extension of the short-term downtrend leg of 126.26 3rd of July low that so far bottomed at 122.55 as a part of the larger down move from 126.91 peak of 29th of June 2012. The cable also maintains near-term corrective consolidative mode, bouncing off last Friday's low at 154.60, but so far not much seen, as despite regaining a initial barrier at 155.00 as 155.33 seen so far, where the descending 20 days exponential moving average so far keeps the upside limited and just ahead of more significant barriers at 155.50 peak of last Friday and the 155.60, 38.2% retracement of 157.21 to 154.60 descent, and basically only break above these levels would signal near-term base at 154.60 and the open way towards 155.90, 50% retracement and more significant 61.8% retracement at 156.21, where is also the peak of 5th of July. On the downside, risk still remains more on the downside as long as our breakpoints at 155.50, 60 stay intact. With a loss of 154.60 to open 154.00, our next support ahead of very significant and strong longer-term base at 153.00 zone that keeps the downside protected since September 2010. As we can see, the several attempts at this point did not manage to break it. Also, just above this, at currently at 153.38, is ascending a main long-term main bull trend line drawn of 2009 low at 135.01, going through 2010 low at 142.30, and basically break of these levels will signal the break of a long-term range that is limited on the downside at 153.00 and at the upside at 167.40 zone, and will open way for a further weakness on the series as shown on the monthly chart. Break of 153.00 would likely trigger a weakness down towards 150.00 as psychological level and support. The dollar yen is losing ground after unsuccessful attempts at the upper range boundary at 80.00. That also marks a break point as this level stays intact for now, and subsequent easing that lost the midpoints and supports at 79.50.40 now is heading lower. 79.30 seen so far, testing the previous low and support low of 2nd of July, ahead of a more significant 79.12 low of 29th of June. That also marks 50% retracement of the up move from 77.65 to 80.61. This is also marking the ahead of also the 79.00 round figure support that marks the base of the short-term range, along with the 200 days moving average currently at 78.97, as the pair remains entrenched within 79 and 80 range in past 3 weeks. And as we mentioned in our previous sessions, break of either side of the range is required to define the near-term direction. At this point, the downside levels of the range are coming under increased pressure, and the break below a 79 zone that marks the range bottom and reinforced by 200 days moving average is expected to open way for further weakness and keep the 80.00 as our initial barrier intact. 78 and 78.60 are seen as the next targets, ahead of more significant 77.67 low of 1st of June 2012, a loss of which will be signal for a further extension of the larger downtrend from 84.17, 15th of March 2012 yearly peak. On the upside, immediate resistance lies at previous support at 79.40.50 zone, ahead of 79.70 and 79.76, with 80.00 seen as a break point to open way for a test of 80.60. So far, the pressure is more towards the downside, and the most likely scenario would be revisiting and retest of the past 3 weeks range floor at 79.00, where is also 200 days moving average. And the dollar Swiss, it seems that is regaining strength after past 2 days consolidative mode after hitting a 98.00 fresh high in early hours of yesterday, with the consolidation being contained downside at 97.50.45 low, where just below this is the ascending 55 days exponential moving average that so far maintains the short-term uptrend of 94.61 low of 29th of June that hit our initial target at 98.00 after clearing the previous barrier and the yearly high at 97.69. This opens way now for further break above, this level will open way for further extension higher with the break above 98.00 to open way for further extension towards 99.00 as psychological barrier and the Fibonacci level 99.49 that marks 61.8% retracement of the longer term down move from 117.30 May 2010 peak down to 70.67 August 2011 low, also also historical low of dollar Swiss. On the downside, 97.45.40 offers initial support ahead of more significant 96.70.80 zone, where is the previous peak of 28th of June and the 38.2% retracement of the upleg from 94.61 to 98.00, and basically break below this level would be more bearish and would delay the short-term bulls in favor of a stronger corrective action. Yellow metal remains at back foot after upside rejection at 16.24, where the double top was left ahead of fresh easing through 16.00, hitting so far 15.76 as corrective action did not show much. 15.93 was the highest level traded yesterday, with the descending 55 days moving average still keeping the upside protected and maintaining the short-term negative tone. More focus towards the downside is seen as the hourly studies are about to break their midlines, and the 4-hour ones are already in the negative territory, with the 20-55 days exponential moving averages crossover at 15.94, reinforcing the barrier at 16.00 and keeping a more focus towards the downside. The main risk will be seen on loss of 15.76 lows of yesterday and last Friday that might open way towards another supports at 15.58 and 15.48 ahead of the critical support zone at 15.20.30 levels, loss of which would be very bearish for the yellow metal, as it will signal an extension of the larger downtrend from last year's record high of gold at 1920, and will allow for a stronger retracement of 10 years uptrend of the gold that rallied from approximately $300 to $1,920 peak on September 2011. And crude oil is undergoing the consolidation after a reversal of 89 high of last week, posted on 5th of July, dipped to 84.00, where temporary ground was found, with the current sideways movements seen limited at 86.46, with the range 86.46 being established in the past 2 days. The studies on the hourly chart are still rather negative as the price action moves again below the 20 and 55 days moving averages, keeping more pressure towards the downside. Initial supports at 84.24 and 84.00, loss of which were also the 55 days moving average on the 4-hour chart, keeps the downside protected currently at 84.42. Loss of this zone along with the 38.2% retracement of the rally from 77.27 to 88.97 to allow for a stronger retracement of previously mentioned rally, and open 83.12, 50% retracement, and the low of 2nd of July at 82.09 along with 61.8% retracement at 81.74. A larger picture is has regained, the studies have regained some momentum, but still a rather more negative tone is seen on the daily chart as the pair, this oil remains in the strong downtrend of 106.41, lower high of 1st of June that so far bottomed at 77.27 with attempt to build a double bottom pattern at this point being materialized so far. It's important that the price will stay above 82.00. That is seen as a short-term break point in order to build up base for a further extension higher and the break above 89 to open 90.00 and 91.84. That marks a 50% retracement of the larger down move from 106.41 to 77.27, low of 28th of June 2012. That was all for today. Thank you for being with us. All those that connected later can find the recorded version in the YouTube. Our page is called Windsor Brokers Forex. I would like to invite you for tomorrow's session that will start at the same time at 7:00 GMT. Until then, I wish you a nice day and very successful trading. Good luck.